Welcome to the Deep Dive, the show that cuts through the noise and gets straight to the insights you need to be truly well informed. Today, we're diving deep into a really fascinating company, one right at the crossroads of energy, climate change, and AI. NuScale Power Corporation, that's NYSE, ticker SMR. And here's the big question we're tackling. Is NuScale Power, with its stock price soaring but practically zero commercial sales, is it really the linchpin of this global nuclear renaissance everyone's talking about, ready to power our AI future? Or is it maybe more of a speculative bubble, just inflated by market hype and facing these massive, maybe even insurmountable hurdles to actually sell anything? By the end of this, you'll have a much clearer picture of what you're actually looking at here. Before we really get into it, though, a quick note from our partners. Remember to like and subscribe to Stock Analytics AI. It's just $4.99 a month, and members get priority deep dives on tickers. We're actually covering all the S&P 500 stocks over the next few months, so members get that exclusive first look. And hey, if you just want a one-off deep dive, drop us a super thanks. We appreciate it.
Absolutely. So our mission today is, well, to really dissect NuScale Power. We're looking at its core business, the competitive landscape, its financials, the whole picture. We'll evaluate the business model, the leadership team, the financial health, and try to get a sense of its intrinsic value using, modern analytical tools. And just for context, remember the share price when we did this analysis, June 26, 2025, was $38.24. Quite a number.
Okay, so to figure out if NuScale is that linchpin or maybe just hype, we need to start right at the beginning. Let's kick off part one, the company's core and financial health. And we'll start with chapter one, business analysis. First thing to really grasp about NuScale. Their business model is, well, unique because they're pre-commercial. They aren't planning to own or operate power plants. They're more like an asset-light tech and IP company. So that revenue they reported, what was it, $37 million for FY 2024?
$37.045 million.
Right. It's minimal. And it comes from things like engineering and design services, feed work, they call it, for projects like the one in Romania, RoPower. They're not actually selling reactors yet.
Exactly. That's the crucial point. The big money, the revenue that might justify that multi-billion-dollar market cap that's supposed to come later. From selling the actual NuScale power modules, the NPMs plus equipment, and then all the long-term services, licensing help, project management, training, maintenance, even fuel supply down the line. That's the long-term vision.
Okay, so tell us about this NPM, the NuScale power module. What exactly is it? What makes it special?
Right. The NPM is their core invention. It's a small, pressurized water reactor designed to be built in a factory, which is key. Each one generates 77 megawatts of electricity. But here's the really interesting part, the big differentiator. It's passive cooling system. Think of it like a incredibly sophisticated self-cooling thermos. It uses natural physics, convection, gravity to stay safe. No operator needed, no external power, no extra water added. It just cools itself.
No.
And that, directly addresses some of those huge public fears about nuclear safety, the kind stemming from incidents like Fukushima. It's potentially a game changer for perception.
That passive safety. Yeah, that sounds like a massive selling point. And it's not just single modules they offer, is it? They have designs for whole plants.
Precisely. They have the VOIGR power plant designs. These are scalable, so a customer can link multiple NPMs. You could have one, or you could scale up to, say, a VOIGR 12 plant with 12 modules generating 924 megawatts. That's serious power. And they also have these E2 centers, basically control room simulators for training operators. They've installed them at places like George Mason University, critical for getting people ready for the tech.
So how does NuScale position itself? They call themselves an industry-leading provider of this SMR tech. And they back that up with something pretty significant. The first and still the only U.S. Nuclear Regulatory Commission certification for an SMR design.
That NRC certification is a huge deal. It gives them enormous credibility. Now, they're still a small company, relatively speaking, about 484 employees, and pre-commercial. But their main value proposition is delivering this scalable, safe, reliable, carbon-free baseload power. What's really fascinating, though, is the versatility. It's not just electricity. Think process heat for heavy industry, powering data centers, especially with this huge AI energy demand producing clean hydrogen, even desalination. That really expands the potential market way beyond traditional power grids.
Which brings us neatly to the next section in Chapter 1. Industry analysis, market trends, and growth potential. What's driving this SMR market, and how big could it get?
Well, the big drivers are pretty clear. The global push for decarbonization, the need for energy security, replacing old coal plants, that's the foundation. But the massive catalyst lately, the thing really fueling the excitement, is that almost unbelievable energy demand from AI and data centers. SMRs seem almost tailor-made for that smaller footprint, reliable power.
Yeah, the narrative for SMRs is just incredibly strong right now. But then, like you said, you look at the actual market forecast and it gets fuzzy. The growth estimates are all over the map. Some say maybe 3% growth. Others are predicting, nearly 28% compound annual growth by 2034.
Exactly. Market Sand sees maybe $7 billion by 2030. Market Research Future, they're talking almost $100 billion by 2034.
So what does that mean? It just highlights the massive uncertainty, right? The potential is there, the narrative is compelling, but how fast and how big this market actually becomes, nobody really knows. It's a huge question mark.
A profound uncertainty, yes, and that ties into the competitive landscape. NuScale has that U.S. regulatory lead, but they are absolutely not alone. You've got the big established players, GE Hitachi with their BWRX-300, Rolls-Royce has a PWR design. Then there are these nimble startups, TerraPower, backed by Bill Gates, X-Energy, Oklo, plus don't forget state-owned giants like Rosatom from Russia. So NuScale's first mover advantage with the NRC. It's a head start for sure, but it's definitely not a permanent moat. Others are coming and fast.
And that brings us to the regulatory environment. It really is a double-edged sword, isn't it?
Absolutely.
Getting that NRC certification, like NuScale did twice now, that's a massive barrier for anyone else trying to enter the U.S. market.
Yeah.
Huge advantage. But it also means every single project needs ongoing site-specific licensing. And then you have to navigate all the different international rules if you want to sell globally. That adds a lot of time, a lot of cost, a lot of complexity. Okay, so if competition's tough and regulation is complex, let's unpack this. Where is NuScale's moat, in the Warren Buffett sense? What really gives them a durable edge?
Good question. I'd say it boils down to maybe three things. First, brand strength. Being the first and only SMR certified by the US NRC is incredibly powerful, massive credibility boost. Second, unique assets. They have a lot of patents, over 450 issued, more pending. They have unique regulatory know-how from getting through the NRC process twice. And critically, that differentiated passive safety case we talked about. The idea that reactors cool themselves indefinitely without power, water, or people, that's huge. It addresses safety fears and, importantly, might let them build plants closer to where the power is needed, like industrial sites or even cities. Big potential cost saving for customers. And third, potentially cost advantages and network effects. These are more theoretical right now. The factory-built modular approach aims for economies of scale, but that's not proven yet commercially. And you could see network effects if customers start standardizing on their UIGR platform, creating high switching costs down the road. But that's speculative at this stage.
That gives us a really good handle on the business itself. Let's shift gears now to Chapter 2, Manage and Evaluation. Who's running the show and how are they doing? We have CEO John L. Hopkins and co-founder Dr. Jose Reyes is the CTO. He's the expert on that passive safety tech. Their big challenge now seems to be making that leap from R&D focus to actually, selling things commercially.
And that they had a major hurdle with that transition late last year, didn't they? The carbon-free power project, the CFPP with UAMPS, which was supposed to be their flagship first project, it got terminated.
Right. Rising costs, trouble getting enough subscribers lined up. That must have stung.
Definitely a setback. Management did pivot, focusing on the RoPower project in Romania and cutting costs, which shows some adaptability. But it really underscored how fragile these early agreements are. It highlighted the sheer difficulty of turning these handshake deals into firm-funded projects.
But here's where things get really interesting, maybe even a bit concerning. Management paints a very optimistic picture publicly, right? Bullish outlook. But their actions seem to tell a different story. What's going on with communication and insider stock moves?
It is a stark disconnect, and something investors really need to be aware of. Over the past year, we've seen, 34, 35 sell transactions by top executives, the CEO, the CFO, the CTO.
Selling their own stock.
Selling significant amounts, over 1.75 million shares in total. And crucially, during that same period, 0 open market purchases by these insiders.
Hero buys. Wow.
Exactly. So you have this constant outflow of capital from the people who supposedly know the company best. It absolutely raises questions about their real conviction in the company's prospects, at least at these kinds of valuation levels.
Okay, what about capital allocation? Where are they putting their money?
Right now, it's all about funding the core business, advancing the technology, trying to get those commercial deals across the line. They've taken a pretty calculated risk, actually investing in long lead time materials like the big reactor pressure vessels before they have firm customer orders locked in.
That sounds risky. But maybe signals confidence.
It signals confidence, definitely, but it also ties up a lot of capital if those orders don't come through as expected. They're not doing any mergers or acquisitions. They're relying on partners like One Energy and Fluor Corporation. Fluor is actually their biggest shareholder. And standard for a company at this stage, no dividends, no share buybacks, all the cash is going back into the business.
Makes sense. How does their return on invested capital, ROIC, look? Though I suspect I know the answer.
Yeah, it's deeply negative, somewhere between minus 19% and minus 61%, depending on the calculation. That's expected for a pre-commercial company burning cash. But it really sharpens the key question. How and when will they actually turn all this investment into real profits? That ROIC number will be absolutely critical to watch once if they start deploying reactors. That's where the rubber meets the road.
Okay, let's get into the numbers then. Chapter 3. Financial analysis. Starting with the basics, market cap around $10.88 billion, though you mentioned that can vary.
It can, yes, depending on the data source, which itself kind of reflects the uncertainty around the valuation. But yeah, roughly $10.9 billion. Now, revenue growth, we mentioned that $37 million in 2024, up 62.5% from 2023. That percentage sounds great.
But it's off a tiny base.
Exactly, a very small base. And it's lumpy revenue tied to these one-off engineering contracts, not recurring reactor sales. So when you compare that, $37 million in actual sales to a nearly $11 billion market cap, it's not just a gap, it's a chasm. Investors are clearly betting on a future that requires absolutely massive, near-perfect growth just to justify today's price.
And the profit margins paint an even bleaker picture currently. Gross margin, TTM, is actually high at 78.44%.
But that's misleading.
Right, an artifact of the service revenue. That won't hold when they sell hardware. Operating margin is negative 265%. Net profit margin, negative 273%.
Yeah, to be blunt, the company is profoundly unprofitable. Expenses dwarf revenues. And free cash flow is negative too, about minus $98 million TTM. They are burning cash, funded by the market, not by selling things.
Okay, what about financial stability? Are the losses consistent? How's the balance sheet look?
Well, the earnings consistency is consistently negative, yes.
Oh.
Big net losses. 2024 saw a $348 million net loss, though that included a non-cash warrant expense. Still, a big operating loss underneath. The bright spot, though, is the balance sheet.
Yeah.
Their debt-to-equity ratio is 0, no debt. That gives them a lot of flexibility.
Zero debt is good. And the current ratio?
Exceptionally strong, 6.23. That means they have very strong liquidity, lots of cash on hand relative to short-term liabilities. That gives them a significant operational runway to keep funding development and hopefully reach commercialization.
Okay. And obviously no dividend stability or growth since they're not profitable.
Correct. This is purely a capital appreciation play for investors.
All right, let's talk valuation analysis. The PE ratio is meaningless with negative earnings. But that price to sales, the PS ratio. What was it again?
TTM-PS is around 221.76.
221. That is astronomical.
It truly is. It starkly illustrates the market isn't valuing current operations at all. It's valuing perceived future potential on an enormous scale.
How does that compare to, say, other nuclear or engineering firms?
Well, BWX Technologies, another player in the nuclear space, has a PS of around 4.65. Fluor, their major shareholder and an engineering giant, is at 0.50. So, yeah, 221 is different. It tells you NuScale is being valued like a pre-revenue tech venture expected to disrupt everything.
So trying to calculate an intrinsic value using discounted cash flow DCF,
Yeah.
that must be incredibly difficult, right? Highly subjective.
Extremely subjective. You have to make huge assumptions about growth rates, profitability, discount rates, all for a company with essentially no commercial track record. The outputs can be all over the place.
And what did the analysis find for an estimated intrinsic value range?
Well, analyst models vary wildly, from negative territory up to around $36.75 per share. Our analysis, trying to reflect that huge uncertainty, landed on a wide range, somewhere between $15 and $35 per share. But even that feels highly speculative. And the key assumptions needed to get even to the high end of that range are heroic. You need explosive initial growth, like maybe 96% CAGR for 3 years, then still strong, but slowing growth, settling around 2.6, 2.8% long term. And the discount rate, given NuScale's risk profile, its high beta between 2 and 3.6, you'd think a high rate, 10-15%, is warranted. But some analysts are using much lower rates, like 7.2, 7.6%, which seems quite low, frankly, and that obviously pushes their valuation estimates higher.
Okay, that wraps up the core company analysis. Let's broaden the lens now and move to part 2, market dynamics and a broader picture. We'll start with chapter 4, market sentiment. What's the feeling out there about NuScale? Looking at analyst ratings, you see this moderate buy consensus, but That seems to hide some disagreement, doesn't it?
It really does. You've had recent downgrades, BTIG, Citigroup citing valuation concerns. And here's the kicker. The average 12-month price target from analysts is somewhere between $29 and $34.
Which is below the current price of $38.24.
Exactly. So even the analysts who have a buy or hold rating seem to think the stock is currently overvalued based on their own targets. That disconnect is a pretty significant bearish flag hidden beneath the consensus rating.
And the media coverage. Lots of buzz.
Oh, yeah. The general tone is mostly positive, but highly speculative. Lots of focus on the nuclear renaissance, SMRs powering AI, data centers. It's a very compelling story being told.
Have there been any recent positive news items feeding that?
Yes, definitely. Getting that second NRC standard design approval for the 77 MemoryWe module was big news, reinforces their regulatory lead. And there's ongoing research into those novel applications, desalination hydrogen, which adds to the long-term blue sky potential.
Okay, let's look at some specific market indicators. Short interest. How heavily is the stock being shorted?
Exceptionally high. About 21% of the public float is sold short. That's roughly 25 million shares.
21%. That's huge. It means a very large, presumably sophisticated group of investors is betting heavily that the price is going to fall a lot.
It's a massive bet against the company, yes.
Yeah.
But contrast that with the price momentum. The stock price at $38.24 is way above its 50-day moving average, which is around $26, $27, and also way above its 200-day average, around $20 to $22. Technically, it's showing a golden cross, where the short-term average crosses above the long-term one. That's usually seen as a very strong bullish signal, indicating a sustained uptrend.
So you've got this massive short interest betting on a collapse and incredibly strong price momentum pushing it higher. This sounds like a classic battleground stock.
Absolutely. You have fundamental bears focused on valuation and lack of earnings, squaring off against momentum bulls riding the narrative and the technical trend.
That creates a really crowded, polarized trade. Sounds like a recipe for extreme volatility.
Precisely. Any positive news could trigger a massive short squeeze, sending the price rocketing higher as shorts are forced to cover. But any negative news, any stumble, could cause a rapid sell-off as the momentum breaks. It's high stakes.
Let's move on to Chapter 5, ownership structure. Who actually owns NuScale? What about institutional holders?
Institutions own a fair bit, around 54% of the shares. It's a mix. You have the big passive index funds, Vanguard, BlackRock, who own it because it's in their indexes. But you also see thematic funds like from Global X or VanEck, who are specifically buying into that nuclear renaissance story. Overall, there's been a net inflow of institutional money lately.
And what about insider holdings and recent transactions? We touch on the selling, but how much do insiders actually own?
It's very low. Insider ownership is less than 1%, somewhere around a 0.77% to 0.83%.
Less than 1%. And combined with that selling.
Right. It reinforces that point. The pattern is overwhelmingly one-sided. 35 sell transactions, 0 open market buys in the last year by the key execs. It creates this stark divergence. External capital, institutional money flows in, driven by the narrative. Internal capital flows out, perhaps driven by operational realities or just valuation concerns. It suggests the market's enthusiasm might not be fully shared by those closest to the ground, at least not at this price.
And ownership concentration. Is it widely held among institutions?
It's fairly concentrated at the top. The top 25 institutional holders control about half the company, so they have significant potential influence.
Okay, let's put it all together with a risk assessment.
Yeah.
Chapter 6. Risk assessment, SWOT analysis. Let's start with the strengths.
Number 1 is that first mover regulatory advantage with the U.S. NRC. That's huge.
Plus the innovative tech, the passive safety, the IP.
And that strong financial position, lots of cash, no debt, gives them breathing room.
Now the weaknesses. The biggest one seems obvious. Lack of commercial history and revenue. They haven't actually sold and deployed a reactor yet.
Which leads directly to the sustained unprofitability and cash burn. And also, that high upfront capital cost for customers, around $3 billion for a plant. That's a major barrier.
Okay, opportunities. The market potential seems enormous, right? Especially with AI and data center power needs exploding.
Massive addressable market, yes. Plus, favorable government policies like the IRA tax credits help the economics. And then there's the expansion into those other applications, industrial heat, hydrogen, desalination, huge potential there.
And the threats. Competition is heating up.
Intense and growing competition, yes. There's always the background noise of negative public perception about nuclear, even with safer designs.
And supply chain issues, execution risk.
Big ones. Potential bottlenecks, cost overruns are always a risk in these mega projects. But let's focus on the impact of key macroeconomic factors. High inflation and critically high interest rates. This is a fundamental threat. These multi-billion-dollar nuclear projects are incredibly sensitive to financing costs. Higher interest rates make them much more expensive, potentially less competitive against alternatives. It's a serious structural headwind for the whole industry right now.
And geopolitical factors. You mentioned tariffs.
Yeah, the reimposition and increase of U.S. tariffs, particularly Section 232 on steel and aluminum, potentially hitting 50% in 2025, that's a direct hit.
Because these plants use a lot of steel and concrete?
Exactly. It directly inflates construction costs, making that capital hurdle even higher. Plus, it can mess with the specialized global supply chains needed for critical components. You put macro and geo together, it's like a vice squeezing potential projects. Financing gets more expensive, and building gets more expensive. Tough environment.
All right, we've covered a lot. Let's bring it all together in Chapter 7. Conclusion. First, let's synthesize the bull case for NuScale. Why might someone be optimistic?
The bull case says NuScale has the right technology at the right time. Clean, reliable power for AI, data centers, decarbonization. They're a clear regulatory leader with that unique NRC certification. They have a fortress balance sheet, lots of cash, no debt. And they offer a scalable and versatile platform that can address many different markets beyond just electricity. It's a compelling story of future potential.
Okay, now the bear case. Why the pessimism?
The bear case screams valuation divorced from fundamentals, a nearly $11 billion market cap with minimal revenue, a PS over 200. It's priced for absolute perfection that hasn't happened yet. There are immense commercialization and execution hurdles highlighted by the CFPP failure. The fact that insider actions contradict the narrative, all that selling, no buying is a major concern. And finally, those crushing macroeconomic headwinds, high rates, tariffs make executing on the plan incredibly difficult and expensive.
And reminding ourselves of the valuation summary from the DCF work, that intrinsic value range was estimated between $15 and $35 per share, with lots of caveats about speculation.
So our concluding outlook is this. NuScale's current share price, around $38.24, is trading above even the high end of our estimated intrinsic value range. Now, NuScale is clearly a technological leader. The long-term opportunity in clean energy is massive, no doubt about it.
However, the current market price seems to have already baked in all of that optimistic future, potentially ignoring or heavily discounting the very real commercial, financial, and macroeconomic risks ahead. So what does this all mean? Well, an investment in SMR today looks like a high-risk, high-reward bet. You're betting on flawless execution, you're betting on favorable financing conditions, and you're betting on the power of this AI energy narrative continuing. At this specific point in time, that share price doesn't seem supported by traditional metrics of intrinsic value.
Which leaves us with a final provocative thought for you, the listener. This raises an important question. In a world desperate for stable, carbon-free energy, is the market correctly valuing the potential of a solution we desperately need? Or is it perhaps caught up in a compelling but maybe unsustainable narrative mubble? What stands out to you as the single biggest factor determining NuScale's future success or failure?
Something to think about. And remember to like and subscribe to Stock Analytics AI. Members get those priority deep dives, including our upcoming S&P 500 coverage. And super thanks are always welcome for one-off requests.
And the important disclaimer. This analysis was generated by an AI system purely for educational purposes. It should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.